Hi, everyone. This is Jason Barrick of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest worked on Wall Street for many years, including generating thousands of percent returns as a hedge fund manager at Quantum Fund. He's also the best-selling author of many of my favorite finance and investing books, including Investment Biker, Adventure Capitalist, Hot Commodities, and Street Smarts. Jim Rogers, thank you for joining me.
I'm delighted to be here, Jason. Nice to see you, although I cannot see you. It's nice to hear you.
So, Jim, a lot of craziness going on lately. It's the 2022 you said was going to start the worst bear market maybe in your lifetime. Do you think demand destruction? I know you've been through a lot of cycles. We're hearing the phrase demand destruction a lot lately with the economy, with commodities. But in your experience in the markets and different cycles, has demand destruction and supply destruction simultaneously occurred in past commodity cycles?
Well, all sorts of things have happened in history, no matter how absurd it seems. Go back, and it has all happened before. What is happening right now is the main factor, as far as I'm concerned, is the fact that China is now opening up again, and that is going to have a big boost to the world economy because China is the second largest economy in the world, and things are going to feel better for a while. Inflation seems to be a little bit better for a while, which is normal. After you have a big run up in any market, you have a correction. That makes central bankers think they've been smart. So we're having what is going to feel like a good time for a while. You should still be worried, but at the moment, things feel good. But Jason, do not give up worrying because it's going to get very bad before it's over.
Well, it sounds like the Fed wants to continue hiking interest rates, but I see a math problem coming up for interest payments on the national debt. But if China does open up, wouldn't that cause increased demand for things, basic things, as you wrote about in Hot Commodities like food, energy, and other types of basic necessity commodities?
Yes, no, it's going. I mean, China has 1,400,000,000 people, and they've been locked down for a while. No, it's going to cause, if everybody just goes and buy a new pair of socks, that's going to have a big increase overall in demand for many things. And we're all going to feel better for a while. But they will continue to print money. What will happen is, yes, they think that they're going to solve the inflation. The central bank, America, thinks it's going to solve the inflation problem. They will continue to be tight for a little while. But soon they're going to say, oh, we did it. We solved the problem. And then they will loosen up again. And then we shall have serious inflation. The inflation problem is not over, Jason, not yet.
Now, since you're in Asia and you've been living there a long time, I know you're not asked this a lot. Does Asia have a really bad inflation and stagflation problem that's worse than a lot of other countries, say Europe or the United States, the last 2.5 years?
I don't think it's worse because they don't have the same kind of huge demand. New York has more demand than any city in China, for instance, because it's so big and so rich. But no, we don't have the same problem in Asia, but we do have a problem. Jason, I don't want to understate this. There is an inflation problem in Asia as there is everywhere in the world. Some places worse than others. I live in Singapore, which is very developed, and so it has a worse inflation problem. Do not think inflation can be escaped just because you don't live in the same city.
Well, also, do you think that the People's Bank of China and the Chinese government will print money and bail out their banks with their real estate bust and their tech bust?
Well, so far they have been adamant that they will not print money and borrow money like we did in the West, and they have not. I mean, they have spent some money, they have borrowed some, and they have printed some, but so far they have been much more restrained. I hate to say it, but they've done a better job than we have in the U.S. That will probably continue. Just by closing off for a while and then opening up, that's going to make a lot of people happy and feel good and a lot of more prosperity in the economy. I mean, if nobody went to the restaurant for a month and suddenly people are going to the restaurants and the suppliers and the waiters and everybody thinks things are better. And they are.
Haven't there also been some really large scale crop failures in China over the last 18, 24 months? And so they've had to import enormous amounts of food. I think even China's agriculture ministry publicly admitted this in the last 6 to 12 months.
Well, Cindy, you know more than I do. If there have been huge crop failures, I did not know about it. I should listen to your program.
Well, we're seeing all these headlines the last 12 months, Jim, about fertilizer export bans. The natural gas prices were astronomically high in Europe. Do you think that this is going to create a global food shortage in the next couple of years?
Well, that's not coming from China. China's not banning fertilizer. That's coming from the U.S. The U.S. won't let, Russia and Ukraine are both huge suppliers of fertilizer to the world. It's the U.S. that's cut that off, not China. China needs fertilizer. China's not banning fertilizer.
Yeah, I agree. I think they just did a deal with the Saudis and Russia. I think they've done deals with both of them for more petrochemicals and fertilizer plants.
Yes. Most people want open trade. It's Washington that's caused many of the sanctions and problems in the last few months.
So I was speaking with you in emails over the last couple months about past commodity cycles. Since I know you wrote a book on this, Hot Commodities, one of my favorite books, and what got me interested in commodities many years ago. In past commodity cycles where the paper futures contracts of commodities went low, did supply and demand eventually fix itself, or was there a lot of bankruptcies where the cost of the commodity producer was still rising, the price was falling, demand was falling, and there was enormous supply problems? Can you just talk maybe about past commodity cycles that you've been through?
You have just talked about recited economic history. It always happens that way. It has for hundreds of years. When prices go up, everybody's prosperous. People produce more. Other people consume less, and the cycle goes on. And it has for hundreds of years. Yes, that has always happened, and it always will happen. If somebody tells you that it's different this time, Jason, run for the hills.
Yeah, we had oil 2.5 years ago go negative for a couple of days. I didn't think I would see that in my lifetime.
Well, it was one futures contract for 1 minute. Nobody was actually buying oil at a discount. Maybe at a discount, but nobody was paying others to buy oil. That was an aberration in the futures markets for a few minutes.
And then it became profitable to arbitrage to store the oil and wait for higher prices. So if you could afford an oil tanker to store the oil, then you can make enormous millions of dollars of profits really quick once the market sorted itself out.
If you know what you're doing, yes. But Jason, I wish it were that easy. I wish we could just sit on the internet and get rich by talking about it. It's not that easy.
Yeah, I agree. The retail trader can't go out like Goldman Sachs can and rent oil tankers or a hedge fund. Yeah.
Yes, it's not that easy to run an oil tanker, I assure you.
Well, right now, when we're recording this interview, Jim, on Monday, January 9th, I know in Asia it's Tuesday, January 10th, 2023, we have natural gas futures prices. They're down 50% in a very short amount of time. We're below $4. That's below the cost of production. So you think these natural gas producers who have hedged at $4, their costs are rising, you think eventually then the price is not going to stay this low for that long if they're producing at losses?
No, of course not. That's the way the world works. If people are losing money, they change their behavior. I would like to say it's simple economics, but simple economics are actually simple psychology, simple human nature. If you're making money, you're happy and you do more. And if you're losing money, you're not happy and you do less. Doesn't matter who you are and where you are, what the product is.
Yeah, I agree. That eventually, especially with higher interest rates, that's going to cause a lot of bankruptcies for private companies. A lot of people just think about government debts and higher interest rates. Higher interest rates, a lot of these small and medium cap companies, their cost of capital's up. If they can get financing, there's going to be a lot of bankruptcy soon with these interest rate increases.
Yep. Well, again, that's always happened. So far, interest rates have really not gone up. They've gone up from where they were when they were zero, but interest rates on a historic basis are not up very much, Jason. In 1970s, we had a big inflation problem. Interest rates went higher and higher. United States Treasury bills, short-term Treasury bills in 1980 yielded over 21%. That is not a typo. Treasury bills, the yield on Treasury bills was over 21%. I mean, that's nothing. I mean, today's Treasury notes and interest rates are nothing compared to what they have been in the past when we've had inflation. So we're going to see a lot more pain before it's over.
But now that we're at 32 trillion, the US government can't afford interest rates that high. I mean, that would bankrupt the Treasury. They could try to raise taxes but there's no way that they'd be able to afford those interest rates. I mean, just the interest payments on 21% of 32 trillion, I don't even want to run the math.
Well, I hope you're right. I hope that somebody listens to what's going on and becomes realistic. The U.S. is the largest debtor nation in the history of the world. In 1980, when that happened before, we were still a creditor nation. The U.S. was a creditor nation in those days. Now we're the largest debtor nation in world history. So I hope somebody is listening. I hope somebody's realistic. The problem is they're not very smart, those people in Washington.
Well, with financial history, Jim, don't you think it's more likely instead of raising interest rates, keep raising interest rates, that they'll resort to inflation? At least that's what financial history says, rather than outright default on the debt. They'll just inflate the unfunded liabilities and inflate the value of the debt, the value of the dollar away.
That's their plan. They certainly don't want to default. They don't want to go down in history as the ones who defaulted, who reneged on their debts. No. They're not going to take the easy way, Jason. This is the way politicians work. That's why they're politicians.
Yeah, you've listed the ways that governments have historically only been able to deal with debt in the past. So there's three ways that you've talked about. You said they can either tax it, they can borrow it, or they can print it. So as far as I know, those are the only three ways.
Well, eventually, I mean, at the moment, what they're going to try to do is borrow more. But eventually, as you wisely point out, that becomes a problem. So they're going to take the easy way, and the easy way is to print.
Do you think that there's going to be a global government debt crisis in the next 2 or 3 years? Because it seems that Japan, after 30 years, is finally hitting its limits too, where historically the government they can either defend government bonds or they can defend their currency, and they can't do both. But Japan has gotten away with it for so long, and they seem to finally be hitting the wall and the limits.
Well, you just made a very astute observation. Of course, people can get away with this for a while. They always have throughout history, but eventually the market says, wait a minute, I'm not going to play this game anymore. And the market then says no. And when the market says no, then the real trouble begins. And the market is beginning to say no to Japan, but the market's going to say no to a lot of people.
So how do you think governments do? It looks like pension funds have gambled with extra leverage, like hedge funds, putting on these leveraged bond trades, leveraged currency trades, leveraged derivative trades. We had crazy bailouts in the United Kingdom. Do you think that that's going to happen on a larger scale all over the globe with these insurance companies and pension funds, that they're going to need bailouts on?
Of course. I mean, Jason, there's going to come a time when they're going to come to you and say, okay, lend me some money or give me some money or whatever. And you're going to say, who are you kidding? Who are you kidding? I can read. I'm not going to play this game anymore. Then whether you're the first one or the 10th one, it's going to happen to everyone. And not just you. I mean, even countries like Germany, Germany of all people, even Germany's beginning to have debt problems.
Well, wouldn't you say a lot of that's because they didn't think that they would need to import all this coal and natural gas and energy at higher prices, so they stopped running the trade surpluses that they were expecting, and their energy imports with Japan, China, Germany have skyrocketed through the roof, preventing those trade surpluses?
Whatever causes the problem, somebody makes a mistake, and always in history, somebody has made a mistake, and then suddenly they say, oh my gosh, what do we do now? And they scramble. And they find the easy way, the easy solution, as long as they can, until the market says, we're not going to play anymore. We've seen this rodeo before.
These ESG policies, though, Jim, I call it energy spending grift. It seems like enormous amounts of corruption. I know in your books you've talked about NGOs and all this wasteful government corruption and spending and bad foreign policy abroad. Do you think that's just more of the same on a larger scale?
Well, when things are good, everybody wants to do great things for the world. And that's when, things have been good. We've had the longest prosperity in American history, the longest bull market in American history. So everybody's looking for more ways to do good for the world. ESG was one of those things. But historically, when things started going bad, some of the things that people wanted to do during good times get scrapped. And I suspect ESG is going to be looked at differently in the next few years. When things go wrong, people are not as interested in saving the world as they are when things are great.
I hope you're right, but I live right outside of Washington, D.C. for over 20 years, and things are the opposite. I mean, Germany's importing enormous amounts of coal. They're burning coal. Germany, despite their politicians going in public and talking about how important ESG is, they imported enormous amounts of coal. They're burning coal. They imported enormous amounts of natural gas. So what a politician says and what a politician does are two exactly opposite things.
But Jason, when voters hit the light switch and the lights don't go on, the voters get very, very angry and very agitated, and the politicians have to listen. So if you go hit your light switch and nothing happens, you're going to notice and you're going to be angry. Everybody is.
Especially if jobs are leaving. I mean, BASF, one of the largest chemical companies in the world in Germany, because their energy costs are so high, they're leaving Germany. So,
as I said, people start to notice when it hits their pocketbook.
So I want to ask about hedge funds. They've just had absolutely horrible performance for the last 12 months. I know you used to be a hedge fund manager. Do you think that hedge funds have just stopped doing smart hedging trades? They seem to, with the bull market and the low interest rates, they just seem to be overly leveraged on stocks and bonds on the long side.
Well, it depends on each one of them, but I do know that right now, we have thousands of hedge funds. Jason, I know we cannot have that many smart 29-year-olds in the world. In the past few years, everybody opened a hedge fund. It cannot be that easy. Success has never been that easy. And now we're finding out that, hey, you have to know what you're doing to succeed in the investment world or the hedge fund world. I wish it were that easy that all we had to do was put a sign on the door, say hedge fund, and we would be successful.
Oh, I agree. Now everyone's short. So they think they're smart because they're making quick profit shorting things. I think there's record amounts of people that are short oil and natural gas right now. But if that trade reverses, they're going to get blown up too.
As I said, when things are great, everybody's happy. But when things start going bad, everybody re-examines everything.
So I know you've been saying publicly in your interviews for the last 8 to 12 months about that there's going to be a very long bear market. Is there anything that you expect maybe to buck the trend, to have some type of bull market that you're bullish on long term?
Oh, long term? Well, of course, I'm long term. I'm bullish on wheat. Long term, I'm bullish on a lot of things. Agriculture has been a disaster for decades now. That's going to change. It always had. You go back and you read history or novels. There have been times when farmers have been the richest, most powerful people in the country. And there have been times when they were disasters. So no, agriculture has been a disaster for a long time. It's probably going to be good for a while. But Jason, there are always these great cycles in history. At times, being on Wall Street has been wildly successful and prosperous. That lasted a long time. Since 2009, we've had among the longest periods of stock market success ever in American history. That doesn't mean it cannot last 30 years, but it never has. So I would be cautious. In 2008, we had a big problem because of too much debt. Well, since 2009, the debt has skyrocketed everywhere. So I suspect that when we have a bear market again, it will be very serious because the debt is so much higher everywhere now.
And you said earlier in the interview that you expect governments to, similar to wartime behavior, where they were selling war bonds in the past and trying to force people to either buy war bonds or incentivize. Do you think then that these governments and central banks will try to force people to buy government bonds and then inflate that debt away?
Well, they always have. They either try to force or they do force. They put in laws, incentives, or whatever. They have to finance the debt. The people in Washington want to keep their jobs. I didn't say this is good for you and me, but in Washington, they care about their jobs more than they care about you and me.
Oh, yeah, I totally agree. And whatever long-term policy, it seems like they want to double down on ESG, even though they've caused a lot of pain with that, with people's electricity bills and causing small businesses to go out of business with electricity price spikes. I mean, if you're in Europe, your electricity bill went up $1,000 in a month. That's insane.
And people notice. You're not the only one who notices.
So what do you think the goal then is for these governments and central banks, the World Economic Forum, for these central bank digital currencies, if they're trying to inflate the debt or at least manage interest payments on the debt?
Well, digital currencies are probably going to be here because it is more efficient for governments and they can control everybody a lot easier. And it's a lot cheaper. They don't have to print it. They don't have to transport it. They don't have to guard it, et cetera. So I'm sure digital currencies are going to be here someday everywhere. They already exist in China. In China, you can't take a taxi with money. You cannot buy an ice cream with money. You have to have your computer money to do anything. They're ahead of the rest of us, but everybody is working on it. Eventually, we will certainly have computer money, crypto money, call it what you will, but it's going to be government crypto money. I don't think that the U.S., when the Treasury says, okay, now here's our money and it's on the computer now, but if you want to use that other money, you can. That's not the way governments think. That's not the way politicians and bureaucrats think. They want control and they want power. There will be crypto money, computer money, but it will be government crypto money someday. And by the way, I don't particularly like it. If you think I'm saying this is good, it's not good for you and me. It's terrible for you and me, but it's good for them. And therefore, it will happen.
I think you're being realistic. As investors, we try to look at facts, right? Pros, cons, risk reward, but objectively, just looking at being realistic, that seems to be the plan. What these governments and central, I mean, they keep testing these digital currencies, they keep advancing them. We just see in the headlines, whether it's China, the US, other countries are advancing these projects further along with these central bank digital currencies.
No, it's going to happen. It makes sense. Technology is always advancing and has throughout history. And when this will happen, and we will all have computer money, it will cause problems down the road. But in the meantime, everybody in the bureaucracy will say, oh, this is wonderful and good for you. Jason, they will say it's good for you. What they mean is it's good for them. But they will tell us all that computer money is great.
But governments can't print more gold or more silver or more food, more energy, more natural gas or oil or coal. So these things can't be printed, especially where if you look at these commodity companies, the costs are going up. The price of the commodities is down temporarily. So these things are looking, from a contrarian standpoint, these things are looking like they're hated. But I'm seeing future supply problems unless demand totally collapses in the short term.
Well, we're certainly going to have future supply problems of many commodities. I mean, known reserves of oil and gas are in decline. Yes, fracking has helped, but then some things have helped, and solar power has helped. Lots of things have helped, but in the meantime, supply of a lot of stuff is going down. Apparently, we're going to have electric cars, Jason, but remember, electric cars use many times more copper and lead than do gasoline cars. So a lot of these changes that are taking place are going to cause supply-demand problems. I mean, nobody's been opening lead mines for a long time or copper mines for a long time. So as we look down the road, we're going to see more supply problems.
Well, plus the grades at these existing mines, the grades are collapsing. There was a new study out with gold mining companies. I think the grades are down just in the last 6 or 7 years, about 20% for gold mining grades. And a lot of those gold mines are copper mines with gold or silver as a byproduct. So those precious metal grades are down too, along with copper grades.
I am not selling my gold and silver.
Are you still bullish on copper and other base metals, even if China stops building as many giant skyscrapers or luxury condos, those types of buildings?
Well, supply demand, for whatever the reason, is significant, is extremely important. And if you say China's going to stop building a lot of stuff, of course, it's going to have a huge effect on iron, copper, many things. The moment China is opening up again, and so the Chinese economy is probably going to have a big revival, at least for a few months. But eventually, if any country of that size cuts back on anything, it has an effect. I mean, this has been going on for hundreds of years, Jason.
Yeah, and even though we had a commodities bull market, in part of 2020 and 2021, and we had high prices, I mean, there wasn't a lot of new supply that came online. It takes years for a new mine or a large deep water oil and gas well to come online.
You have just clearly defined economic history and the way the world works, and the way the world always has worked.
Yeah, so I still see looming supply problems coming with a lot of key commodities over the next few years, even if demand temporarily falls. I'm looking at, I don't know if you look at the mining companies as much as I do, but the mining company, their profit margins, their costs are up. The oil and gas companies, the costs are up. And now natural gas, like it looks like the natural gas companies are starting to sell at a loss, produce at a loss.
Well, that leads eventually to supply problems, which eventually leads to higher prices, especially if governments print more money to try to solve their problems.
So you see then as inflation or stagflation as the main way out of what the government, it's not a good solution, but historically that's what governments have tried to get out of the problem then with dealing with these government debt.
That is their easy way. If they cannot borrow more money, if they cannot earn more money or borrow more money, they have always printed more money. When I say they, I'm talking about governments throughout the world, throughout history. I'm not picking on anybody.
Are you planning to write any more books?
Who knows? I doubt it. I have nothing planned at the moment, but if you'd asked me 30 years ago, I have any books planned, I would have said no. And since then, I've done a few books. So who knows? Who knows?
I'm just curious because I read all of them.
Thank you. Well done. Thank you. When
Jim,
when I see you, I will sign all of them for you.
Well, when are you coming back to the United States?
Oh, who knows? I don't have any plans at the moment, but who knows? Who knows?
Well, Jim, I really enjoyed our discussion today. If my listeners want to check out your books or take a look at some of your research and your interviews, how do they do so?
Well, I don't really have, I have a website, but it just shows my schedule. I don't really have any way for all that to happen, Jason. Maybe I should get organized and come up with a way. I am interviewed. I presume that this interview and others are on the website, on the internet, but I'm sorry, I'm lazy or not very ambitious or something because I don't organize it.
I'll put a link to your Amazon page with your book. So if people wanted the hard copy or the ebook or the audiobooks.
Well, I hope everybody buys and reads my books. Yes. Well done. Thank you.
Well, I think hot commodities is probably the interesting one now because I think there's going to be good opportunities considering how hated a lot of these commodities are and how short a lot of these hedge funds are. I mean, almost all the stuff that's coming out lately from the mainstream financial media, Wall Street is negative. The commodity bull market's over. We're shorting commodities. There's demand destruction. I just hear it repeated ad nauseum lately.
Well, Hot Commodities was not written as a book of hot tips. Hot Commodities was written as a way to describe the commodities markets for people, because remember, for most of history, American history especially, commodities have been an unknown or under invested asset class. So I wrote that book just to explain how they work for people. It wasn't written as a book of hot tips. I mean, there are chapters in there about oil, for instance, or coffee, but they were not written to tell you what to buy. They were written to tell you how it works. And you have to figure out what to buy.
I agree. And you also designed the Rogers Raw Materials Index, which was a lot better commodities index than what the Wall Street banks had, which is overweighted to a couple different key commodities. Maybe you'll have a ETF and exchange traded fund related to the Rogers Raw Material Index in the near future.
Well, that index has certainly far outperformed all the others, which was the reason I did it, because I couldn't find a good index to invest in. So that's why I came up with that index. And so far, for whatever reason, it has certainly outperformed everybody else.
Well, I think it's because you have so much extra exposure there to the soft commodities and food prices with this inflation and the supply problems and bad crop failures out of a lot of different countries. And then the fertilizer shortages, I think that's probably why.
Well, as I said, when I was looking, I couldn't find a commodity index that I would invest in, so I had to come up with my own. So far, it has worked.
Well, necessity is the mother of invention, and I hope that gets turned into an exchange traded fund that's easier for large pools of capital to invest in. But thank you again for your time. I really appreciate it.
Thank you, Jason. Let's do it again sometimes. Happy New Year. Bye-bye.